If you're thinking about buying a home or tapping into your equity, now might be the time, but the clock could be ticking. With mortgage rates varying, more homes hitting the market, and buyers starting to return, this week's update breaks it all down. Hi, I'm Yasmin, your trusted mortgage broker. Let's get into it. Mortgage rates nudged up a bit right now. The average 30-year fixed is around 6.79%. It's not a huge change, but even small rate moves can affect your monthly payment. So why did rates shift? Well, this week, the Federal Reserve held their policy rate steady, as expected. They're still planning to cut their rates later this year, but only if inflation continues to cool down. Now, here's the important part. The Fed doesn't set mortgage rates directly, but their decisions influence how the market reacts. And that ripple effect is what moves mortgage rates. So instead of waiting for the perfect rate to magically appear, focus on what fits your budget today, because timing the market is like guessing the weather 6 months out. There's finally some good news for buyers. Pending home sales rebounded after a rough January. Purchase applications rose up 1% for the week and 7% compared to this time last year. Inventory is improving, so you've got more options and fewer bidding wars. After a slow winter, calmer weather and more listings are helping buyers feel hopeful again. If you're looking, this might be the calm right before the spring storm, when more buyers jump in and competition ramps up. Here's the twist. While the housing market is picking up, consumer confidence in the economy just hit a 12-year low. Why? Well, people are stressed out about inflation, market volatility, and tariffs that could raise prices on everyday goods, even more than it already has, including materials used to build homes. Tariffs equal higher costs for things like lumber and steel. Higher costs equal builders raising home prices, which means waiting could mean paying more for the same house. So if you can, get that sale now. If you've owned your home for a while, you've probably built up a chunk of equity. That equity could be used to pay off credit cards with higher interest rates, tackle home projects before tariffs kick in and make the cost of that project even more expensive, or invest in something new with value still strong. Now's a great time to explore a cash-out refi or a HELOC before home price growth slows or rates climb again, as either of those conditions will make financing more expensive. To help you get into your new home, we're offering special pricing incentives for qualified home buyers. With down payment assistance, we have various programs offering between $5,000 to over $18,000 in free grants, forgivable and repayable second loans. So with 100% financing and rate buydowns, there are options to make homeownership more affordable. And we can close loans in as little as 10 days nationwide. Thanks so much for watching. If you're ready to explore your options, let's chat. I'll help you get pre-approved, crunch the numbers, and feel confident, whether you're buying your first home or unlocking the value in one you already have. Don't forget to like, share, and subscribe, and I'll see you in the next week's update. Bye.